regulation in crypto. There's interest also in looking at other countries, including Singapore, on how such crypto regulation has evolved or is evolving. From a Singapore perspective, there's interest from investors who would like to invest in Indian crypto businesses, subject to certainty from regulations being put in place. And that's how this idea was born for this webinar, essentially to provide a forum for information sharing and discussion on the evolving regulatory framework. But before we begin on this forum, a caveat is in order. Please note that this session is meant for general information, and neither the organizers, the speakers, or the panelists' view should be construed in any way as providing legal or regulatory advice or opinion. My name is Sriram Chakravarti. I'm a counsel at Raja & Tan, and I will moderate this session. We're very pleased and in fact very grateful to have a great set of speakers and panelists for this session. In terms of the program flow, we will first start with a presentation by Regina Liu on the Singapore regulatory framework. Regina leads the financial institutions practice at Raja & Tan. Regina's presentation will be followed by a presentation by Nishit Desai Associates, Vivek Katpalia, and Jaideep Reddy, who are experts in this area and will present on the Indian regulatory framework. We hope to do that in about half an hour, and about 6:30 Singapore time or 4 p.m. India time, we'll move into a panel discussion where Nishchal and Canny will join us. Nishchal is the CEO of WazirX, and Canny is the Managing Director of OSL Brokerage out of Singapore. I hope to keep the proceedings fairly snappy so that we can conclude the session by about 7 p.m. Singapore time or 4:30 p.m. India time. We're conscious today is Friday. So let's kick off the session. May I now request Regina to share her presentation, please? The others panelists and speakers can probably go off the video. Thank you. Regina, over to you.
Thanks very much, Sriram, for that introduction. Just give me a minute and I'm going to put this on. Hi, everyone. Thank you for joining us this late afternoon in India and this evening in Singapore. I'm very pleased to be able to present and give an overview of the present cryptocurrency regulations in Singapore. Firstly, to start the discussion, let me just share with you my observations as to the Singapore approach to regulations. We have seen that the MAS, who is the super regulator, financial regulator in Singapore, taking a very consultative, calibrated, as well as pragmatic approach to crypto regulation so far. So generally speaking, industry views are sought before new laws are tabled. As an example, there was a recent consultation on the scope of e-money as well as digital payment tokens in December 2019 to seek views on regulations of stable coins, as well as consultations on a new omnibus act for the financial sector in July last year. And the feedback from the regulators is that they're not going to introduce any new laws until they've gotten the feedback from the industry, right? Because they know that this is an evolving area, and any sort of drastic move or sort of unwelcome measures may kill innovation. So in general, the approach is to keep an eye on what is also happening internationally. For example, the FATF standards on virtual asset service providers, right? As well as what other jurisdictions are doing. Singapore is very small, and it does not purport or want to be the tail that wags the dog, so to speak. Let's move on. The other key observation, and I think most of you appreciate, is that the fintech ecosystem over the last few years is very much supported by the financial regulator MAS. So they have introduced regulatory sandboxes right? Whereby legal and regulatory requirements may be relaxed if the application for the sandbox is approved. So new business ideas are welcomed to be introduced into this to the industry, provided that they play within certain parameters, So the concept of a sandbox. The MAS has also introduced fintech financial grants, right? There are various grants. One example is a business growth grant of about 80 Singapore thousand dollars, right? And there is the rupee conversion for Singapore-based fintech companies to offset proof of concept cost. And there are many other financial grants as well, whereby the MAS may actually also co-invest. Then, of course, we have the annual Singapore FinTech Festival, something that's been going on for the last few years, and I think it's touted as one of the largest FinTech festival in the world. So as you can see, the MAS is very much a supporter of FinTech development because as part of the overall government ambition, it is part of the overall government ambition to build a smart nation where there are smart city initiatives, right? So MAS is encouraging the using and deployment of and development of blockchain infrastructure using technology for application payments, smart contracts, RegTech, know your client's due diligence. The government itself actually has embarked on their own Project Ubin, which is a proof of concept project to conduct domestic interbank payments using blockchain technology, whereby the Singapore dollar is digitized. So that's an ongoing project. Having said all that, right, investor protection is also an issue that the government is aware of. So on this front, Singapore has an investor alert list. So whilst it has every intention to build the fintech ecosystem, it doesn't intend to, of course, promote bad actors or allow Singapore financial system to be used by scammers and swindlers. So there is an investor alert list that the MAS puts up on its website to warn the public in relation to unlicensed institutions or institutions who may be scamming the public, so to speak. We also have a financial education program, which is found in Money Sense. So investors are then told about what is a cryptocurrency, what are the dangers, and what to look out for. So that's what the MAS and the government so far has done in terms of investor protection. The use of cryptocurrency is still low relative to the use of other conventional fiat currency. So there is no ban, so to speak, in relation to cryptocurrency, and how the MAS is dealing with investor protection is really by way of disclosures and education. So that's the Singapore approach on how they regulate and deal with cryptocurrencies, generally speaking. So now going into more specifics. Okay, what is the regulatory approach and objectives insofar as cryptocurrencies are regulated in Singapore? So the approach specifically is risk-based, and presently the policy objective behind regulating any type of crypto activity is essentially money laundering and financing of terrorism, right? The key concerns is that bad actors will use cryptocurrencies to launder money or for terrorism related activities. So the laws are built around behind that objective right now. Also, of course, prevention of cyber attacks and hacking of user accounts and wallets. In relation to tokens, digital tokens with characteristics of securities, the approach is to treat them as securities or as whatever capital market products, you know, that they in fact are. So presently, the approach for that is technology neutral. It doesn't matter whether it's a bond and the bond has been digitized. It is a bond. It doesn't matter if it's a collective investment scheme. If it's digitized, it will be treated as a collective investment scheme. So it's a technology neutral approach. Okay, and now going specifically into the regulatory framework that has been set in place in recent years by the MAS for crypto-related businesses. Okay, specifically for digital payment tokens. So digital payment tokens would be, for example, Bitcoin, Ethereum, Litecoin. They are regulated potentially under the Payment Services Act. And insofar as we're dealing with coins, digital coins, which actually take the nature of securities because they promise a certain return, as an example, then they will be treated as securities, and the dealing of such digital securities will be regulated under the Securities Futures Act. And insofar as advice is given, they will be regulated under our Financial Advisors Act, as with non-digital securities or non-digital capital markets products. Generally speaking, when the MAS when the government enacts these main acts, the MAS as a regulator also issues guidelines and directions to guide on the implementation and interpretation of the various obligations. Okay, before I touch on upcoming regulations, let me just talk about what are the statutory obligations of crypto businesses right now under the Payment Services Act. So right now, presently in Singapore, insofar as a person is dealing in digital payment tokens, which would encompass the service of buying or selling digital payment tokens in exchange for money or other digital payment tokens, or if a person is in the service of facilitating the exchange of digital payment tokens, whether by facilitating offers and invitations to buy and sell DPTs in exchange for money or other DPTs. Insofar as a person is undertaking these activities, then a license is required. Examples would be an operation of an online token exchange platform, such as Coinbase, Binance, right? E-wallets that allow users to exchange or transfer tokens from one user to another. All such activities would, generally speaking, be caught, for which a license is required under the Payment Services Act. So the license can take the form of either a standard payment institution license, and if the average monthly transactions cross 3 million, then a major payment institution license will be required, which is not subject to limits, but of course is subject to higher and more stringent approval criteria. So that's the present law. And because the key objective behind licensing, right, of DPT dealers and exchanges is really AML and countering of financing of terrorism. The key obligations are found in a notice that's issued by MAS on the duties and obligations of license holders in relation to money laundering and MLTF risk, right? So it sets out very, very prescriptive requirements to develop, implement policies, procedures, ongoing monitoring of transactions, performing enhanced measures when they're higher risk. So this is on top of the general laws in Singapore on anti-money laundering, which is found in the acts I've just listed here, the Corruption, Drug Trafficking, and other serious crime acts, the Terrorism Suppression Financing Act, as well as in the UN sanctions, which Singapore has adopted. Okay, so that's the present state of the law. And I will just take you back a few slides up where we talk about what about the upcoming obligations. As you know, the crypto scene is evolving, right? Even as we speak, it's evolving. New technologies coming up. You've got, I think your blockchain 1.0, 2.0, 3.0. I mean, the developments are ongoing. So the business models are also changing. So in light of that, even though the Payment Services Act is a relatively new act in Singapore, the government has already, MAS has already started consulting on further changes in laws. So to recap, the current position is that the Payment Services Act only applies currently to buying and selling of DBTs, exchange of digital payment tokens and fiat currencies, right? Operation of exchange to deal in relation to these activities. So the proposal is to introduce further changes and expand the scope of digital payment token services which are regulated in Singapore. The proposal, which has been passed and will come and actually has been passed as law, although it's not in effect yet, is to broaden the definition of what is digital payment token services to include transfer or arranging the transfer of digital payment tokens from one account to another, custodial services in relation to digital payment tokens will also be caught once the new expanded laws are introduced, as well as brokering of digital payment token transactions, even though the broker never possesses money or the digital payment tokens, and they're just merely taking instructions and carrying out such instructions. As I mentioned, the expansion of digital payment services to include these new activities, the laws have been passed, but it is not effective yet. I think the original intention was actually to consult on the specific implementation laws in the first quarter, but it didn't happen. And so we do not know whether it will be consulted upon the second and third quarter. It may not. So it may be, so even though the law has passed, it may take still a couple of months before the laws will come into effect by the look of things. In any event, when the laws are passed, generally speaking, MAS will generally allow a transition period for those who are already dealing in these activities and who haven't gotten the license. So generally speaking, and I think this is also the case here, the transitional period will be 6 months. So there will be a period of 6 months after the law comes into effect for the relevant persons who are dealing in the expanded activities of digital payment token services to apply for a license. Okay, having said that, that's not the only change in the law that is afoot in Singapore. As I mentioned earlier, there was also a consultation paper on the new Omnibus Act for the financial sector. And the key proposal in this act, one of the key proposals in this new Omnibus Act is to regulate virtual asset service providers who are established or created in Singapore, but offer services completely outside of Singapore, right? And this is based on FATF recommendation that VASPs or VAPs, if I may call them that way in short, must be licensed because they also, their activities also create money laundering as well as countering of terrorism financing risks. So it applies to the FATF standard as well as these new laws, these new proposed laws applies to any persons operating from a permanent place in Singapore or any corporation incorporated in Singapore, any partnership formed in Singapore, right? But whose service is actually provided outside Singapore. So under the present law, such a person would, of course, not generally speaking, would not be caught because there's no targeting of Singapore, even though they're based in Singapore. But going forwards, if this new Omnibus Act is introduced, then VASPs who are based in Singapore will have to be licensed, even though they may be offering digital token services outside of Singapore. The ambit of the change would encompass virtual asset service providers who deal in digital payment tokens as well as digital tokens. So it doesn't have to be payment tokens specifically, but it can also include securities tokens or any kind of digital representation of value that can be transferred, right? So if such a service provider is created in Singapore and is providing services outside Singapore, when this new law comes into effect, then these VAPs will have to be licensed in Singapore. And because generally the key objective, the key mischief targeted by this new Omnibus Act is in relation to money laundering, it is likely that such VAPs will have to be licensed as well as have some kind of anti-money laundering compliance function based in Singapore. Anyway, it is still very, very early days in relation to these proposals, and the MAS has said very, very specifically that they will be consulting further, getting feedback before any laws are introduced on this front. Okay, so this is a snapshot of the laws so far and the upcoming laws in Singapore. And I'm happy to take any questions at our Q&A session from 6:30 onwards. So now I'm going to hand this time over to Sriram to introduce the next speaker.
Thanks, Regina. Thanks for that very quick overview of the Singapore regulatory landscape. It's a very tough task, given that it's an ocean in terms of the regulations and the legislation, and to be able to do it in 15 minutes. Thank you very much. A couple of very quick takeaways from that presentation. One, clearly the heady pace of regulatory evolution that we're seeing, given that the Payment Services Act was just introduced very recently, and we're already seeing version 2 of that act that might come into play. Two, in terms of the omnibus regulation and the WASPs licensing in Singapore, that could be something that we should keep a watch out for. And thirdly, the point that you mentioned, Regina, in terms of the consultation by MAS with the industry. I think that's a huge part of the evolving regulatory landscape, the consultation and the discussions between industry and the regulator, and that's heartening and very, very interesting to know in terms of how that piece is evolving. Before I give the floor to Vivek and to Jaideep, just for the audience, if you have any questions, Regina just mentioned, if you have any questions, we can take that at the panel discussion. You should put in your questions in the chat window so that we can consolidate that and then take those questions at the panel discussion. But now over to the Indian regulatory overview. Vivek, the floor is yours. Thank you.
Thanks so much, Sriram, and thank you, Regina. That was very enlightening. And I think as we discussed earlier, one of the reasons for holding this webinar was to obviously learn from what Singapore has done in the regulatory landscape. My colleague Jaideep, who's a real expert on everything crypto in India, will walk us through what the state of play in India currently is. What I'll basically do is give a 2 to 3 minute introduction on where we as a firm have focused on blockchain and crypto. So one of the key aspects, Jaideep, if you can just quickly jump the slide. One of the key thought process that we have as a firm is that obviously every new technology and every new instrument brings with it a new legal tax or regulatory issue, complication, problem, whatever you want to call it. And blockchain crypto assets are no different. We started focusing on blockchain and crypto assets in 2013 as a firm, so very early on. And at that point of time in India, no one really knew about blockchain and crypto to the extent that people do today. In 2000, around that period of time, some enforcement action had begun on exchanges in India, and the regulatory authorities, the enforcement directorate, other enforcement bodies had no clue as to what Bitcoin was. And a group of exchanges had approached us then, and what we did is we put together very quickly back then a press conference, and addressed the media, and basically made a statement that crypto and Bitcoin, particularly at that point of time, wasn't illegal per se under Indian law. Whilst we don't have a regulatory framework currently that like Singapore does, nevertheless the law did not prevent or hold it to be illegal. And therefore, once we made that statement in the press, a lot of public awareness actually started growing on this, and the regulators also started reaching out to us. The Reserve Bank of India reached out to us. Others reached out to us to try and understand this entire landscape a little better, to shape their own thinking. And from then onwards, we released a research paper, which again got a lot of traction. And so the reason I'm giving this background is that in the vast grayness of lack of regulatory policy on blockchain and digital assets in India, at the same time, it isn't illegal. And now, if you fast forward to today, obviously the industry has evolved. There are a number of players, exchanges, foreign issuers, and others, and India is a fairly large market as far as trading in crypto is concerned. In a few years ago, the Reserve Bank of India came out with a circular, basically asking the banks not to provide banking facilities to exchanges. And once again, in fact, on behalf of IAMAI that's put this webinar together, we challenged that circular before the Supreme Court of India, and the Supreme Court of India held it to be unconstitutional, and actually revoked that particular circular, and therefore providing banking facilities to exchanges and other crypto businesses as any other normal business would. Jaideep will touch upon all of this as we go through some of our slides. I think one of the key objectives that we want to get out of this is to try and frame the regulatory understanding in India, and Singapore is really a good example. And if we could import some of the regulatory steps that Singapore has taken into India, then I think there is a great future for the business in India as well. So Jaideep, I'll stop here, and maybe you can take us through some of your slides.
Sure. Thanks, Vivek, and hi, everyone. Thanks for joining us. So I'll try and keep it snappy, as Sriram said. Just to start with, what is the industry landscape we're looking at in India? Most people think crypto is mostly about buying and selling the tokens, but actually there's a lot more going on. Of course, you do have the investors, traders, exchanges, etc. But you also have a burgeoning software development ecosystem. So you have talented software engineers from the best institutes who have upskilled in blockchain technology and programming, and some of them have created well-known companies at a global level. A good example being, for example, Polygon, also known as Matic, has got a lot of popularity and has made a big impact on the Ethereum network at a global scale. Of course, we have several promising players domestically in India as well. Nishchal is here from WazirX, a leading exchange, who are doing particularly well after the Supreme Court judgment. Besides that, we also have remittance providers, so people looking to ease up the inefficiencies in the current systems of remittances, particularly cross-border remittances. So using crypto and blockchain as a solution to do that. Of late, we've also seen people take an interest in investment advisory and fund-based services. So obviously, with the growing interest, you have a retail and institutional market who wants exposure to this asset class, but may not always be best advised as to which tokens to invest in, etc. So you have a group of people wishing to explore solutions to set up funds or provide investment advisory services to the lay person, in the same way that someone would say engage an investment advisor to help them advise in the stock market, or would put money in a mutual fund rather than individual stocks. So that ecosystem is there is an appetite for that as well in India, but there are regulatory gray areas on how to go about that. I just wanted to give that overview before we proceed into looking at some of the legal issues. Obviously, the major point of law in India on this matter is the Supreme Court judgment. Just as background, in 2018, there was no law specifically on crypto. In that environment, there was a lot of retail price kind of rise, etc., particularly on the token side. So both on the ICO level as well as Bitcoin, etc., hit all-time highs. So Bitcoin, I think, reached around 19,000 USD in 2017-18. There were a lot of ICOs making offers to the public. So it was very much in the mainstream eye, and possibly with a view towards consumer protection, the RBI, the Reserve Bank of India, issued a circular preventing banks and financial institutions from allowing exchanges and traders as well from buying and selling through their bank accounts. The Internet and Mobile Association of India challenged this on the ground that it was not constitutional, as Vivek mentioned, and the Supreme Court resulting in view that yes.
I think your slides are not moving. Can you just see that? Yeah, they're moving now, and perhaps make it full screen.
Yes.
I think they've moved now.
Okay, thanks, Jaideep. Sorry to interrupt. Please
So
continue.
Jaideep, you're on slide 7.
Yes. So the Supreme Court judgment just set aside the RBI circular. What that resulted in is that there is no statutory prohibition now on banks providing accounts to Indian exchanges or persons in India wishing to buy and sell cryptocurrency. There has been some news of late, interestingly, for those who are following, that banks have shown reluctance, but actually there's no basis in law for that kind of reluctance, because once the Supreme Court sets aside any legislative or administrative move, there is no further need for that authority to revoke that or cancel that. The court action itself renders that invalid. So that is in fact the reason why banks were able to provide services post March 2020. And in our view, there is no impediment for them to do that anymore. But of course, that will be an evolving situation on the ground. Having said that, it is not like there's a complete regulatory vacuum in India. While there is no prohibition on transactions, and transactions are governed by general principles such as the Contract Act, etc., and criminal laws in case of any fraud, you do have some laws like the Foreign Exchange Management Act, which would regulate cross-border movements of crypto assets. For instance, a cross-border crypto-to-crypto transaction may not strictly be permitted, but there is room for interpretation on that, because the RBI has stated that it has not classified cryptocurrency as currency or otherwise under FEMA. So there is currently a lack of clarity on how the RBI would look at cryptocurrency under FEMA. Similarly, the RBI has also said that cryptocurrency does not amount to a payment system under the Payment Systems Act. So, as of now, there is no specific license required in the manner that Regina touched upon in Singapore for the PSA. We don't have a specific extrapolation of our payment systems law to cryptocurrency. So perhaps some clarity would be useful in that regard, but it also results in the position that there's no specific license in India as of now to operate a crypto asset wallet or exchange, which is where the questions are arising as to what may happen in the future. Will there be a ban outright or will there be a regulation? So that is something that we'll have to wait and see. The securities regulator in India has also not classified any particular token as a security. In fact, most Indian entrepreneurs who wish to launch a security token have generally done so from entities abroad or moving abroad and doing that because the Indian securities law framework has not really been adapted to accommodate a global issuance of a token, particularly in light of FEMA, which is India's exchange control law. That would make cross border activity in something like a token sale quite challenging. Just to add to that, we do have a new offshore financial service center in India called the International Financial Service Center. It is housed in an environment in Gujarat called Gift City, where persons incorporated there are treated as non resident entities. And it is with a view to make that center a hub of offshore financial activity like Hong Kong and other jurisdictions, and to attract foreign investment in that space. That regulator has actually been quite proactive and innovation minded. They've actually shown an appetite to engage with new business models, and they have a regulatory sandbox where, for a fit use case, they would be willing to grant a sandbox approval. Having said that, the RBI, SEBI, and the insurance regulator as well have regulatory sandboxes. Those are still in the early stages. The RBI sandbox, in fact, excludes cryptocurrency, so cryptocurrency would not be eligible. But there is scope in other areas like retail payments, etc. And finally, the tax treatment. So transactions are already taxed. It is not like there's no tax on cryptocurrency. GST, which is the goods and services tax, is generally paid on the service fee charged by exchanges and wallet providers. And income tax is paid on the trading profits, depending on the way the investment is done. In the interest of time, I won't delve into this particular slide in much detail, but the takeaway is that the RBI circular was set aside by the Supreme Court. One interesting point that happened in the company was actually amended to introduce this new requirement for all Indian companies from next year, from the current year, to declare their cryptocurrency or virtual currency holdings, which means by, say, later this year, one would get a picture of all the companies in India who actually held cryptocurrency as of March 31st, 2021. And this could be seen as a positive move because after the RBI circular, it's the first statutory recognition of cryptocurrency, the first time a law has been specifically applied to cryptocurrency. It brings the entire ecosystem into the visibility of authorities. It already was through tax statutes, but this brings it even more above board and in a transparent way. So this could be the first step to more detailed regulation. Everybody is interested in whether India will introduce a ban. There is no clarity on that yet. We do have certain statements by the finance minister and other officials. The last, I think, media statement was fairly balanced, saying that not all options will be shut out and there will be room to experiment. At an official level, the Minister of State had mentioned that the government would take a decision on the recommendation of a committee, which in fact in 2019 had proposed a ban. And then the legislative proposal would be introduced in Parliament. Interestingly, the chairman of that committee has now changed his view post-retirement and has mentioned that there is scope to regulate cryptocurrency and that a ban may not be justified. So one would have to monitor how that progresses over the next few months. The government had also clarified in Parliament about the taxation of cryptocurrency, which again can be seen as a little more transparency on how the government looks at cryptocurrency under existing law. Just a quick overview of our work. We advise most of the leading exchanges, both in the advisory and litigation spheres, as well as foreign players and foreign governments on this space. We also proposed a detailed regulatory framework to the Government of India on how crypto exchanges and wallet providers, basically anyone who takes funds into trust, should be licensed. The Payment Services Act example, which Regina touched upon, is a good framework. But there are various modes and modalities under Indian law where that can be operationalized as well as expanding the Prevention of Money Laundering Act in India to actually cover this space. And that can, in fact, it does not require a new legislation. It can actually be done by government notification tomorrow if there is will to do that. So in our view, there is a lot of scope for the government to actually implement a balanced framework. The Payment Services Act is one example. There are, of course, other examples from the EU, like the AML-DeFi directive, which applies to crypto. There are a menu of options, I would say, that India can look to frame its guidelines. So with that, I will stop this leg of the presentation and look forward to the panel.
Thank you so much, Jaideep, and thanks to Vivek as well for that presentation. Again, like I mentioned to Regina, there's so much out there in terms of regulation or proposed regulation that putting it in 15 minutes is a very, very difficult task. But clearly the takeaway from the presentation is that it's a wait and see approach. The Companies Act recognition, statutory recognition, at least of cryptocurrencies, is a welcome step. And the post-retirement dicta of the committee chairman would be, waited with bated breath in terms of how the regulatory framework is going to evolve in India. We now move into the panel discussion. We're slightly behind time. We now move into the panel discussion. So I would invite Kani, Nishchal, Jaideep, and Regina to switch on their videos and come to the stage in terms of panel discussion. Thanks, Kani. Nishchal, Regina, and Jaideep. Thanks. In terms of the panel discussion, I've got some questions from the floor already, and I will try and post those to the panel. But just to get started, perhaps, Kani, I can get started getting your views. Obviously, there's tremendous interest in cryptocurrency adoption. There was a survey conducted in May 2021 by MasterCard in the Harris poll, which revealed that 40% of people around the world plan to use crypto in the next year, with 67% of millennials reporting interest in the technology. From your viewpoint, sitting out of Singapore, but also having operations around Asia, Kani, what's your broad sense of the evolution of crypto regulation in Asia? And in your view, which countries in Asia are leading the charge on the regulatory front?
Hey, thanks, Sriram, and thanks for inviting me to the panel. Certainly, we do see a lot of younger adoption. It's the digital currency of the next generation, right? But I always go by the fact that the first principle that we have is that good businesses will navigate to locations where they're able to scale the business with clear rules of engagement. And I think we've come a long way with regulations. with Asia actually leading the charge. I mean, with Japan early in 2014, they first looked at proposed regulations because we had, Mt. Gox, we had a big sort of incident where they got hacked, and then they said we need to enact some consumer protections. Those laws went into effect in around 2017. It took a few years, but I think that really set the groundwork for subsequent regulations to take effect all around the Asia region. One good example is Hong Kong. Great example of how clear and concise regulation that builds on an existing foundation. For example, OSL invested a lot of time and effort to obtain the first crypto license in Asia. It's akin to a Type 1 and Type 7. So it's rooted in an existing framework. Type 1 allowing you to act as a broker-dealer, and a Type 7, which is ATS, automated trading system. These are activities that are given to existing financial institutions, but now in Hong Kong allows you to perform the same activity, but just in the form of a token. So you have that bedrock or foundation for tier 1 financial capitals to launch themselves to provide clear and concise regs. Another also great jurisdiction is Singapore, another tier 1 financial market, and has provided legislation since 2019 that regulates the buying and selling of cryptocurrencies. As well, on top of that, they also have a tax moratorium on the sale of crypto. So it's really encouraging, people to adopt something that's new, especially for the next generation. The results: hundreds of firms apply for licensing. I think Regina talked about the licensing framework here, but the fact that most of these firms are global players eyeing Singapore as the Asia headquarters is just a tremendous boom for job creation, the crypto community, the Singapore Fintech Association, and hence why myself and many others are here. Sorry, Sri, I think you're on mute.
Thanks, Kenny. That was interesting. Clearly, the benefits of crypto, both from an industry perspective and regulatory perspective, are real and profound. Nishal, do you have the same viewpoint? What are you seeing from an Asia perspective and an India perspective in terms of the evolution?
Look, I think at least when I look at India, I would say the country has been taking baby steps towards regulation. And I think for a country as large as India, that is probably a better approach rather than bring in sweeping regulations, which can because if you look at the downside of early regulation, I would say that that can sort of negatively affect innovation, because imagine if the internet was regulated early on, a lot of the innovation that we see today may not have been possible. So I see as no regulation. I don't see that as such a bad thing. But the side effects of that are where, like the banking issue that we have in our country, those are the side effects. So what I believe is that some sort of guidelines coming out first before regulations would be the right direction that at least India could take, and we are probably seeing that happen. Like, for example, the MCA asking all the companies to report their crypto holdings. So bits and pieces, I think different parts of the Indian regulatory sectors would start accepting some crypto-related positive, I would say, outcomes in their own respective ways. So I think India is going to definitely take baby steps, and it will take a while before we see proper regulations. Though as an industry, we would prefer seeing some guidelines coming that would help ease out the banking issues that exist in the country, or the uncertainty that a lot of customers have in the country on what protection they can expect. How do you keep the bad actors out? So there's going to be a balance that's going to be hard to maintain, because at one side you have innovation that you do not want to curb. On the other hand, you have these bad negative use cases that can emerge if you don't have some sort of a protection in the country. Only time will tell how this evolves, but yeah, this is the situation right now.
Thanks, Nishal. That's an interesting take from you in terms of starting off with perhaps no regulation and the internet analogy. But what we are seeing on the ground, and perhaps the concern that is coming, is a ban, which would completely be the other side of it. It's the complete other end of the spectrum. And I wanted to perhaps pick your brains a little bit on that point. Obviously, regulators can take a protectionist attitude, I think a conservative attitude, given market conditions and scenarios. But in terms of taking that kind of a protectionist attitude, what would be the spur for that kind of a attitude? Could it be just fear in terms of what could go wrong? This could be capital flows out of the country. This could be money laundering issues. This could be, financing terrorism, if, for example. Or could it be from a technology point of view to give homegrown actors an advantage? You mentioned innovation. It could well be the policy framework that we want some time to give our technology players time to scale up. And therefore, the protectionist attitude could be played that way as well. It could also be from a central bank point of view, to come up with its own digital currency. Again, would like to get that flavor and an understanding both from you and Kenny.
Sure. I think, at least from a ban point of view, I don't see that happening, for a simple reason that India, if you look at the last 10, 20 years of India's progress, software and internet has played a major role in that. And we are one of those top software nations in the country, in the world today. And crypto happens to be like the next leg of software innovation. It's also called the Internet of Value. If the original internet was the Internet of Information, this is the Internet of Value. And I don't believe that India is going to let go of this opportunity to build into this ecosystem. But I think in terms of the fear that exists and for the regulators, it has largely to do with some of the things that you pointed out, especially the whole customer protection, the capital controls that exist. And a way to, I think a lot of the confusion today is there are some basic confusions that I've seen in the whole India space, is where there's this blanket definition of crypto being seen as a currency. So a lot of times there's this confusion that every crypto is a currency. And I think the way to solve this is through education and through building more innovative products that sort of dispel this myth completely. For example, now that you hear about NFTs, where all of a sudden now you're hearing crypto and images and video files being sold. So all of a sudden, people are realizing, okay, this is not just about currencies, but there are so many more use cases that could be built. But all the while, we were all trying to say that this is a definition of crypto, or this is what cryptocurrencies are. End of the day, I think when you innovate and you build products, that's like the best education that you could provide. So I'm really happy when I'm seeing the stance change now, where they're looking at crypto as more than just currency, and that will actually push regulators in the right direction, where they don't look at how do you ban it, but how do you regulate it effectively, and how do you at the same time protect the nation. Now, coming to the whole are they afraid? Is that fear, or is that protectionism? I think it's going to be a bit of both, or a mix of all. There has to be fear because this is something very new. Nobody knows what the future would be when you adopt something like this, when you openly let everyone innovate and build on this. And there's also some sort of protectionism that a lot of countries need to bring in, because crypto is a network effect model. And the moment there are large crypto networks built, it's going to be hard for any country that enters crypto later on to break into these network effect models. And we've seen this in social networks. For example, today in India, the largest social networks are Facebook and Twitter and Instagram. Not a single homegrown social network that has emerged to compete with them. And I would say the time advantage, where these social networks came in at a time when India was still figuring out its software product strategy. I think that could probably be changed with crypto, where you sort of promote local crypto networks and help the local entrepreneurs to build out. But that again is just my point of view, that that might be one of the reasons they might be looking at how do you contain this and let it evolve in the country first before you open it up to outsiders.
Any your take?
Yeah, surely I would say initial hit the nail on the top of the head. It started out as a cryptocurrency, but it's evolved to something much more meaningful. I mean, it's a whole asset class, and it has a whole future behind it. So it started out as one thing, and it will evolve into something else, something bigger than we can all imagine. So maybe I'll start off a little bit on maybe from a global front. There was an article yesterday from Bloomberg that talked about how Binance, the world's largest cryptocurrency exchange, was being investigated by the IRS and the DOJ. I mean, they're looking into things like money laundering and tax offenses and looking at the business. In particular, they were looking for actions or acts where Binance may have sold leveraged products to U.S. citizens. So that's something we can chalk up to perhaps consumer protections. Maybe ensuring that U.S. citizens aren't sold something that they're not aware of. But here in Asia, I mean, we have several countries that have banned cryptocurrencies and created unintended effects. Excuse me. For example, in South Korea, there's something known as the kimchi premium. This is in fact the higher price you would pay for Bitcoin in South Korea versus the rest of the world. And this is essentially due to capital controls. This premium was actually 63% in January 2018. So that means you have to pay $16,000 for Bitcoin in South Korea that was sold for $10,000 everywhere else. I mean, it's just insane how much you have to pay for this. But soon thereafter, we saw job postings for blockchain developers at many South Korean financial institutions. Does this sound like home court advantage? Difficult to say, but I don't see the advantage of creating an inflated market for goods that you can't tax and generate meaningful revenue from.
That's a very interesting point and counterpoint. I mean, both agree on the cryptocurrency aspect, which is much bigger than just currency, the crypto market per se. But in terms of protecting homegrown sector, I see quite a different take, and very, very valid. And I think right, Kenny, I want to keep you on that point because you spoke about Singapore's framework. You mentioned Hong Kong, but you also mentioned Singapore. And you're obviously quite familiar with the evolution in terms of India and what it's going through. And perhaps would like to bring Regina into this question as well. Any takeaways here that you think from a Singapore's regulatory perspective, there could be some takeaways that perhaps India might find interesting? I personally thought perhaps sandboxes and as well as consultation between industry and the regulatory powers. Those might be interesting, but really between you, one from the industry and one from practice point of view, any one or two takeaways that might be useful?
Sure. The way I think about it was when I was doing research on the actual application of the ban from India perspective, is that I read an article that one official planned to ban private holding of crypto assets while promoting blockchain, as a innovative technology that everyone should adopt. I was like, how can you have one without the other? It just shows a little bit maybe lack of understanding about how cryptocurrencies work. But in terms of from a Singapore perspective, I think I'll come back to my original point about clear and concise regulations really provide businesses a way to scale. I mean, that's the cornerstone here in Singapore. I mean, we do have a very strong anti-money laundering and compliance framework. I think Regina covered upon a lot of the points which the MAS is looking for. They're looking for you to ensure that when you onboard individuals or corporates, that you have this in mind. But the actual application of it, the spirit of what the MAS is looking for, is how do you put this into effect? I mean, at OSL here, we don't just review, the know your customer at the point of onboarding. We actually have to monitor trading behavior to make sure that it matches their profile. We actually run blockchain analytics on coins that are deposited to our wallets to ensure that it wasn't used for nefarious purposes. And if we determine necessary, we will quarantine these coins, hold these coins, and then raise a suspicious transaction report to the Singapore police. All of these actions mirror what you would see in a regulated financial institutions. And this is why OSL is actually seen as a very sound choice for institutions who want to gain exposure to digital assets with a licensed, publicly listed, and a Big Four audited firm. There are just going to be more and more choices for players that are looking to adopt crypto assets here in Singapore.
Regina, do you want to add to that?
Sure. Yeah, I would say that Singapore has taken as I said at the beginning, taken a very calibrated approach, right? Because it loves the technology. May not be so in love necessarily with the currency, but they love the technology to begin with at least. But they're very careful not to throw the baby out with the bathwater, right? In tackling the issue. So I think for them, the way they looked at the issue was that, look, this is great technology, but are there issues with cryptocurrencies, especially in the beginning, right? Yes, I think anti-money laundering is definitely one of them. And Singapore is big. Singapore is big on anti-money laundering. I mean, because we've had our share of incidences, the 1MDB issues and all that. So their key focus really in regulating cryptocurrencies right now, digital payment tokens right now, digital tokens is really anti-money laundering. Will it change? It may change, and so that it doesn't just involve anti-money laundering, it may also touch on user protection, where digital asset intermediaries take on money. Okay, so I think the point that I really want to make is, and I think what Singapore has done, it's calibrated and it wants to give the business community certainty, right? But without front running, by ensuring that regulation doesn't front run technology or innovation in any way. So they take a cue from what is happening internationally, what is being done by other regulators, as well as paying attention to the ground. So perhaps these are some sort of takeaways from Singapore. But I think it's still early days, and I would say that everyone is still learning. I think Singapore is still learning. For example, the Payment Services Act, there's a lot of license applications going on right now, and I think probably the volume was more than envisaged, which is a victim of their own success, if you can put it that way positively. Yeah, but maybe there are some lessons to learn from that as well.
Thanks, Regina. I think the learning curve surely is really out there, and it's steep, both for regulators and industry, and and it's not been just a smooth ride. As Nishchal put it, it's very, very early days, and I think as Kenny has as well put it, it's really early, it's evolving, and you've got to, every time there's a little hiccup, you try and address that, and quite a few bumps on the road that you keep coming up with. But I think the process has to keep going on. I want to shift a little bit and bring Jaideep and Nishchal in from an Indian crypto industry perspective, and a number of questions coming up from the audience, and I'm trying to put those questions in my questions to you. But I would say 90% of the questions that are coming are really relating to India. They relate to FEMA aspects, they're relating to NITI Aayog blockchain strategy paper, taxation aspects, etc. We can't get into those are very specific. But really, Nishchal and Jaideep, if you were to look at the crystal ball and look at what's coming in the next 12 months from a regulatory perspective, what would be the two major announcements that you would like to see? And what do you think would happen if if you're disappointed for some reason this doesn't come through? I'm putting you a bit on the spot, but
should I go first?
Okay. Go ahead, Nishchal. I think Jaideep will follow.
I think I said this before as well. What I would like to see is some sort of a guideline that both our government as well as our central bank, if they could release some sort of a guideline. And in the interest of making sure that we are going towards innovation and not restricting that in the country, I would look at guidelines that are more of don'ts than do's, because the moment you put in saying you can only do these things, you sort of box innovation. But when you say do not do these X number of items on the list, you're sort of protecting um, the sector and the people while ensuring that any out of the box ideas can emerge in the country. So I would like to see the first set, I would be like, what are you most afraid of or worried about? And maybe, figure out how do you avoid that in the nation, and probably release that as guidelines. And then from there, we can always, as an industry, go forward and bring more regulatory, I would say, clarity.
Yeah, so just to add, I think one low-hanging fruit that the government can do is to bring exchanges and wallet providers, like I said, under the Prevention of Money Laundering Act. That is a direct inclusion of them within the KYC AML framework, so they would be treated the same as a bank or an NBFC, etc. So that's something that doesn't require a lot of groundwork or legislative process, etc. So I think that is one thing that would be good to see, and possibly, as Nishchal said, some principles-based regulation over crypto players, followed by maybe a detailed legislative framework. Of course, if things go in a negative way, there can be an outright ban. We do believe as a law firm that that would be subject to constitutional challenge, and generally the courts don't favor outright bans unless there's no alternative. But yes, that is the worst case scenario, and there may be a transition period for that. But we'd have to wait and see, and one would really expect now that there's been so much wealth created, as well as jobs and employment and other opportunities created in India, that all of that doesn't go away in one fell swoop with a knee-jerk action like a ban.
Thanks, Jaideep. Jaideep and Nishal, just in terms of consultation, I know IMI, of course, is a platform. It is advocating clearly for consultation, providing those avenues for consultation. There's a blockchain association as well with IMI. Something very similar is done on the Singapore front from Singapore Fintech Association. Kenny is a member, leads the charge there. What are you seeing in terms of that collaboration and that consultation? Is it active? Are there forums for those discussions to take place in India?
So, quite a few things being done as part of all of us exchanges being under IMAI. First is let's look within. What are we doing together? Is we have this sort of a code of conduct that we've come up with, which in the absence of regulation, it does not mean that you do not follow any law of the land. So we have these set of guidelines that all of us have sort of self-regulated and said we'll follow these set of guidelines, which includes KYC, AML, customer protection, customer service, all of those things that we expect eventually regulators to mandate. And apart from that, we are working on several white papers, and we are working on several, I would say, initiatives to ensure that we can spread the right information and understanding of what cryptocurrencies are, how exchanges operate in the nation, how this entire sector operates on the ground. Because if you look at regulations, the governments and the regulators might have theoretical knowledge from the materials that are available, but us exchanges, we have our ears to the ground. We are the ones who are working with the end users, so we can provide a wealth of information that is technically not always available online for you to understand. So we are trying to impart this and send this across to the regulators and to the government as an industry initiative.
Right. Thanks. Kenny, from a SFA perspective, how's the consultation going, and how active is that? Any thoughts? And how useful are these consultations in the evolution of
Yeah,
regulation?
I think tremendously useful. I mean, the fact that a regulator is having open consultations shows that things that they quite don't understand and they're thinking, they're open to getting feedback on, and these consultations are quite specific. Any questions that they pose, they invited people from the industry to shape that policy and to provide their feedback. So that interaction is all posted publicly, and we can all view it, and then ascertain what the regulators are thinking, in terms of protecting, consumer interests and the public good. It's all there for everyone to see. So as regulations evolve, and it will evolve, there's going to be further consultations about different aspects of transfers of custody, safekeeping, derivatives. All these evolving will take time, but will take maturity, and it's be timely for the market, because when the market demands it, regulators going to hear about it through either industry collaborations such as the Singapore Fintech Association or the Blockchain Association, or the new community that's set up for this. But as businesses root themselves here in Singapore, they are going to seek out engagement with the regulator. And the great thing about Singapore is that the regulator will hear and will consult.
Thanks, Kenny. Regina, any thoughts on that, or?
Yeah, nothing really to add. I think probably, I guess, Singapore is a small country relative to, compared to India, and Singapore's framework is we have a super regulator. So within MAS, they are the central banker. They also are the market developer. They are also the regulator. So I do think that in that sense, it gives MAS the ability to give heed to what's on the ground, because it all lays within that, that one super organization. So I think that's where it differs from India, where you've got SEBI, RBI, and other sort of stakeholders. Yeah.
Thanks, Regina. Vivek has just joined us. Vivek, any thoughts on that in terms of industry policymaker consultation and what you're seeing?
You mean in India, Sriram?
Yeah.
Yeah, I think, nothing more to
India has
add.
been at the forefront. India has been the forefront of that, clearly leading the charge on that consultation. But thanks. I see that we are almost 15 minutes over time. Didn't expect that. We obviously, when you're having a great conversation, time flies. My takeaway was really the last question. I think the process of regulatory evolution continues, albeit at a very, very heady pace. We've heard that. Looking at the Singapore evolution itself, and obviously clearly from an India perspective as well. Nishchal mentioned baby steps. Jaideep mentioned what those baby steps could be, starting with AML regulation and then kicking off into some kind of legislation. But clearly, I think the pace of regulation will only pick up given the interest in the industry and the adoption of crypto players. I think the final takeaway would be, in order to create a really effective regulatory framework, it's imperative that governments work very closely with crypto industry and representative bodies. I think the help of bodies such as IMI, SFA, as well as industry participants, be those law firms, professional bodies, brokerages, exchanges, I think it's really crucial, because we owe it to ourselves and to create that ecosystem. And we didn't get a chance to really speak about the cross-border aspects of crypto regulation, but that's where I think governments intersay each other need to start looking and having those discussions. Clearly, that's already underway, but I think given the cross-border nature of crypto and transactions, this needs to be put to the pedal. And such consultation and dissemination of information between industry participants would really be the key in terms of designing the most appropriate and preferred regulatory framework, at the same time supporting innovation. So with those words, all that's left for me is to thank an eminent group of experts who spared their time to join us. You all are very busy, and to spare the time to kind of educate, inform, discuss, and provide this forum, we are very grateful. on behalf of the organizers, IMI, as well as the supporting organizations, the Singapore FinTech Association, Nishit Desai and Raja and Tan, thank you very much. Thank you also to our audience who signed up and registered in large numbers for posing your questions. Sorry we couldn't take all your questions, but I hope we did justice in the panel discussion with at least some of those questions and gave you some kind of perspective in terms of the present regulatory framework as well as what's coming up. Thank you very much and wish you a very happy weekend ahead. Thank you.
Thank you very much.